Good morning, Dr. L here. This is a short video on how I use energy theory and my proprietary mathematics to forecast markets. My basic theory is that markets are moved by energy fields. I have studied these for years, and I've tried to reduce them to be able to make practical forecasts. After all, the only reason you would ever want to buy or sell any market vehicle, be it a stock or commodity or bond, is that you had some idea that it was going to move in a direction that you could capitalize on. Years ago, I decided that the only independent forecast one could make of prices had to be made independent of prices. My mentor, Dr. Ev Garrett, suggested to me that prices were moved by energy flowing off of the sun. And he sent me off on a learning expedition to discover what research had been done by people like Luby in the 1930s. And these gentlemen had actually found that energy coming off the sun could be used to forecast some economic time series. What I want to show you today is a quick view of how I used my theories and my tools to forecast Tesla motors. In 2010, when I heard that there was a stock coming out called Tesla that made electric cars, I was extremely interested because I was looking at the time for a new stock in a new market. And I immediately was attracted because of the name Tesla. I'm an electrical engineer, and I consider Nikola Tesla the greatest electrical engineer of all time. Most people don't know it, but he invented the AC power system from the generators to the transmission lines to the motors that we use today. And he did this while walking in the woods in Bavaria. He built it and tested the whole system in his head. So when you plug into the AC outlet over there, think of Mr. Tesla. I also thought this would be a great chance to follow a stock from inception and see how well my XGO Energy forecasting method worked. Now this is about the first 2.5 months of the stock, and I was impressed in that XGO called for a double bottom here, and the stock did give a double bottom, and we're starting to rally. So I did follow this stock for some time, and I further added some ZD filtered XGOs, which I call ZGOs. There's a methodology for picking the length of these so that they will follow or bring out the various length cycles in a stock. And I found this minor cycle in green here, ran up to the high, down to the low, up to the high, down to the low. Now, the scaling between this energy forecast and the price is totally arbitrary. So it's more about the timing than about the actual size of the move, although you can get some idea of the size of the move, but it's not a perfect relationship. In addition to the minor cycle, I also extracted a longer term cycle, which told me that this might be a good stock for early in its career, with a pretty good run up before it was even 5 years old. That's a pretty good high-tech stock and a pretty good new issue. Now this is a chart that I happened to take with me when I had a meeting with Ryan Sindelar at NinjaTrader. The purpose of that meeting was to show him what my charting software did that NinjaTrader did not. In particular, I wanted to show him how I set up charts that had lots of space on the right and starting at a given time and an ending time and a high and a low. They don't just scroll along showing you the last bars and sliding everything to the left. Prices fill in from left to right. And that's what I call a static scaled chart. That kind of a chart lets me put various overlays on it, fractal patterns, as well as look down the road. And the reason I want to look down the road is the only reason anyone should ever buy any investment vehicle is that they've got a pretty good idea that they're going to make money over some sort of a time frame. So my energy forecast and my static scale chart here suggested that one could indeed make money in Tesla. Now I asked Ryan what he would do given this chart here, and he immediately saw this double top here. And he thought, well, maybe he ought to just hold off on buying until we came into this dip. And then I pointed out to him that there's this period in time here where both the minor cycle and major cycle were running up, so that and I told him I'd done my last buying right in here. I'd been accumulating on the dips, got a little bit here. But right in here, I was afraid I was going to not get another chance. So looking ahead, it's now a couple months later, and whoa, that's what happened. The company, Tesla, announced that they're going to make a profit. And all of a sudden, there was not enough stock to go around because the people who wait for profits were ready to buy. Now, this chart doesn't even have today's data on it. The stock actually hit a price of 74 today and then pulled back to something like 69. But to me, it was all in the energy and in the forecast. Now I have a problem in that this stock has done something that chaotic systems do called scale jumping. So I'm going to have to rescale my prices to better fit this energy curve. So that gives you a clue on how I use my energy model of markets to make a forecast and try to understand where a market or where a stock or commodity might go. Now, on my moneytide.com website, you can buy Exco charts, which gives you this curve for any stock or commodity. There's $36 for a year's worth. And I've got a couple people who buy quite a few of them. So that's a cheap way to get in. If you want the tool that generate these filtered cycles and let you do this stuff, you have to buy my WinExco software. So that's my sales pitch. Hope you enjoyed learning about energy forecasting of Tesla Motors.